Hey guys, welcome back. Patrick here. In this video, let's talk about the best SPAC under $10. In fact, I opened my position today for $7.87, a complete steal in my opinion. This is a company that has been completely overlooked by the market. Now, do you guys remember a month or two ago, I was literally begging people to buy stocks while people were freaking out? Well, now a lot of the prices have recovered. There's not nearly as many opportunities at the 52-week low than we did back then, but there are still opportunities out there, including this one. Strongly encourage you guys to look into it. It is called Playstudios, ticker symbol MYPS. They just merged and now the prices have been retracting. People don't know about this company yet, so they will in the future. In my opinion, it has very, very good risk versus reward. So if you're still in the market for new positions to open, look into this one. Let's get started. Please like and subscribe. It really helps out. All right, some of you have requested that I show you my positions when I talk about these stocks. So here it is, MYPS, Playstudios. I bought 500 shares today at $7.86 for a value of $4,000. I'm not going to start big on this one. This goes with my new strategy that I told you guys about, where I'm not really going to be buying into SPACs before the mergers, especially if I expect to hold it long term. I'm going to wait until after the merger when the dust settles. Right, and I'm going to build them over time, especially after we get a quarter of two of the earnings, because we found a lot of information based on these earnings. Think about companies like Lordstown or GoEV, right? We've got a lot of negative news concerning the earnings, so that's why I'm being very patient with them. I'm going to build the positions over time. All right, so if you sold me those 3 shares for 7.87, thank you. Anything under $8, I'm going to be interested in buying into this company. All right, so if we look at the share price, $8, it's rebounding, right? But if you notice on the chart, I mean, it literally fell off a cliff after the merger. This company is not really added any momentum, even when it was announced, right? So a lot of people have objections about the stock. We'll look into that, right? There are a couple risks, of course, as there is with all of the stocks, but in my opinion, they're a little overblown. I see a lot more upside than downside with this one, especially at these levels. Is it going to go to $7? Maybe. I hope so. I'm going to be buying more, but you know, you're not going to see the stock going to $5 and then never going back to 10 after that. For those of you that are not familiar with the company, quick introduction. They are a game developer that really is closely linked to MGM, the casino company. You guys know I have a position in MGM as well. Well, some of the executives of Playstudios come from MGM and Wynn, right? So they are very closely related to the gambling industry, but this is not gambling related, right? They are just free-to-play games that are Vegas type games. So they have My Vegas Slots, My Vegas Bingo. You guys have probably seen these on the App Store. They are very, very popular and common, right? So if it was just those games, I wouldn't be as interested. There is definitely a demand for those, but the company has captured market share. They're making a lot of revenues already with those, but they're kind of stagnating a little bit. So what I like about Playstudios, right, is the fact that they're going to be expanding into more casual mainstream games. I'm especially looking for Kingdom Boss, which should come out in the fall. So that's going to be a big catalyst because obviously it's going to add a lot of users. So when you look at the daily active users, well, that metric is really going to get better for Playstudios, and of course the revenues are going to increase. So that's going to be a very, very strong catalyst over the next year. That's one of the reasons why I like it right now, because no one's looking into the stock. Everyone thinks it sucks. Well, you know, they don't really know the details, and that there are going to be some good catalysts coming up in the future. Now, the good thing about this company also is that we have one-to-one, apple-to-apple comparisons. So sometimes when it comes to SPACs, especially when we were looking at EV companies, right, none of them have any revenue. So it's very, very difficult to get good comparisons and really good analytics because we really have to make up our own numbers. Well, it's not the same with this company, right? Because we can look at Playtika, which is a company that does pretty much the same thing, right? They started off with casino games, and then they're expanding into more casual type games. So Playtika, as you can see, is worth $9.6 billion right now. And they have, if you know about it, it's called Slotomania. So my wife has actually been playing this game for a couple of years, and so is her mom. So that's pretty interesting. Now I'm going to be investing in the competitor to this company. So Slotomania is very popular. As you can see, it has 1.8 million ratings on the App Store already. So these games might not look like it, but they are very popular. And that's one of the reasons why I'm interested. It is very, very different from if you were investing in, let's say, Blizzard, Activision, or Take-Two Interactive. The big problem with those companies that I have is that, it takes them 2-3 years to develop a game, and then they don't really know how many copies they're going to sell. And once you buy the game, let's say you buy it for $60, right? Well, you're going to play with it for 2 weeks, maybe a month, right? If it's a really long game, and then you're going to put it on your shelf and you're never going to touch it again. Well, it's very different with these types of games, right? It has a lot of recurring revenue. There's not that many players that actually pay, right? A lot of them are free to play, but the ones that do pay end up like lasting a very, very long time. So the lifetime value of these players is very high, and this brings a lot of recurring revenues for this company. I'm going to show you the revenues in a minute, but that is the business model, and that's why I actually like it. By the way, I forgot to mention, we were talking about the valuation for Playtika at 9.6 billion. Well, there are other companies out there that you already know, like Zynga, that's at 11.3 billion. Now, let's be totally honest, those companies are much more established than Playstudios, but it just goes to show this is a huge market. So if the company actually delivers games that are promising in the future, well, there is a lot of growth potential, right? Currently, you can't see it on Yahoo. It doesn't show it quite yet, but if you look through the actual documents, well, they emerged at a valuation of 1.04 billion, and that was with the share price at 10. Now that the share price is at $8, that means the valuation is somewhere around 850 million, something like that. And the company is going to have 291 million on its balance sheet. So you can see that they have a very, very solid floor with their current roster of games, casino related, but there's also a pretty good ceiling in the future if they can deliver on these promising games, such as My Vegas Bingo. They'll continue doing their casino games, but also if they can expand into like more casual mainstream games such as Kingdom Boss, which they're already releasing in some countries, but we can't test it quite yet in the US. At least I couldn't in the App Store. But they're going to compete with games like AFK Arena. Apparently this has 1.2 million daily active users and 454 million in revenues. All right, so that's a big market, and the company can really increase their revenues. But that is also one of the risks that I have to mention, is that we know that they have a good track record with the casino games, but they don't really have a track record in those other like more casual RPG type games. So they may be really successful, maybe they'll completely exceed expectations, or they might not. So that is one risk we have to take into consideration. But the fact that we already can rely on the revenues that they're getting now with their affiliation with MGM, that's what really I like about it, right? It's the fact that there's very low risk, but high reward. Before I wrap up the video, let's look at some of the numbers, and this is where there's going to be some debate. Some people are going to be very bearish on this, and some people are going to be very bullish on this. The market right now is bearish, and that's why the share price is tanking. Personally, I tend to see this as more of an opportunity. Let me explain. So in the first quarter, they generated 74.1 million revenues. This is not a startup, right? They do have revenues already with their existing roster of games. 27.1% increase year over year. That's pretty decent. And the net income of 5.9 million. So the company generates a small profit already, and that's pretty good. But here's the thing. A lot of the investors are kind of worried that gaming companies like these, and a lot of the other ones that I showed earlier too, are more COVID plays. When people were stuck at home playing video games, well, that was the peak for these companies. And when you look at the chart, I mean, look at this, daily active users and revenues on here, you can see that, when the pandemic hit, this company really had a big spike like the other ones did. So if you want to be more bearish on the stock, like the market is right now, you can say, hey, in 21-22, the company's revenues and users are going to be tanking, right? So they haven't really proven that they can grow their user base that much since 2019. Look at how it's been really stable, around 1.5 million daily active users. So that is the bearish argument, and I think that is a very compelling argument. On the flip side, why I think this is a pretty good opportunity is the fact that Not only does this give you a really strong base, right? The risk is extremely low because they already have those really, really loyal customers. But also, now they're expanding into other categories. It really feels like they kind of maxed out in the Vegas-style casino games niche, and now that's why they're branching out into the other ones, right? So as soon as the Kingdom Boss games launches, unless it's an abject failure, they are going to get some users. So this is going to go up, even if they have to incentivize the viewers, right? The players, right? Because they're going to be doing a lot of marketing for that. So they are going to be having costs to acquire those players, but the daily active users should go up as they release more and more games. They can do puzzle games, and they can do action games, you know, whatever types of category that they go for, their user base is going to increase, and so will their revenues, hopefully. Now, that is the way I see it. Of course, it's not guaranteed, right? The game can be a complete failure. I looked through the game store, the app store, and in other countries where it's released, a lot of people complain about the crashes and the bugs. That is the big issue with this company. That is the #1 complaint about their games, is that they're very unstable and they crash a lot. But assuming that they can get that under control, I do have a strong feeling that the daily active users and revenues are going to go up from here. So now that the stock is actually beaten down and at $8, that's exactly what the opportunity is, right? If it was just skyrocketing, well, instead of being at $8, the stock would be at 15. So it's up to you to decide if you think this is bullish and, you know, there's a big opportunity in them launching new games, or if you think, hey, they haven't really proven they can grow from here, let's not really take a chance on this one. Last thing I want to say about that is that, remember, they have 200 million plus. So their strategy, they already mentioned it, one of them is going to be acquiring third-party game developers, right? So they kind of force the growth that way also. I know for a fact that you guys know about Candy Crush Saga. This has been one of the most popular games over the past 10 years. Well, this was developed by King, and King actually removed the advertisements from this game. So when I looked into like this deal and this transaction, I saw that only about 2.7% of King players actually spend money in the game. So most people actually don't pay, right? They just play this for free, but then they're making so much money from the paying players, and then just every month they deposit a little bit of money, that they actually took out the advertisements, right? So like 90% of their revenues came from people spending money in the game, and only 10% came from the advertisements. So that's very, very interesting to know. I think that's what's going to happen also with Playstudios in the future. They're going to be making money with their loyalty program. I don't want to really talk about it in the video. You guys should probably look into it if you want. That's kind of like a gimmick on top of their games. But in my opinion, like the fact that they're making so much money with in-app purchases is very good to know. Now, King was purchased by Activision Blizzard for $5.9 billion a couple of years ago. So you have King at 5.9, you have Playtika at 9.6, Zynga at 11.3, and then you have Playstudios at about $800 million. Right, so there's a lot of room to grow in the future. I don't know if they're going to be acquired or not, but they can grow organically by launching more games, or they can acquire other studios with the money on their on their balance sheet. All right, so I open a position, 500 shares, $7.86. Anything under $10, in my opinion, is pretty good for this company. If it was at like 12 bucks or 15, I would not recommend it. But under 10, and especially right now around $8, I feel like this is a pretty good deal. So let me know what you think, right? My strategy for this one is I'll wait until we get the earnings and when they release the new games. Like if they actually increase their daily active users, it's going to show us that their strategy for acquiring players is going to be working, and they'll be able to redeploy that in all the new games that they get, right? So that's my plan. Small position now. If it keeps dropping, let's say it drops $7 or $6, maybe I'll add more. But otherwise, I'm going to be waiting until we get more details on the upcoming games. So let me know in the comments what you guys think. Are you going to be following me in this adventure? I'll see you guys in the next video.